All right. Hey, I had to build everything for our special event today. So let me. I don't have all the windows open. I don't even have chat open, so I don't think I can even pop this in the chat. So let me try to figure all that out. Hang on. And then we'll get going. YouTube.com. And it's the wrong account. I need a different browser. New browser, new window, proper profile, youtube.com. That works. Go live. Go live. Should find us there. Okay, good. So while we get all this going, we have about 5 minutes until ADP. Okay? But this afternoon, I will host you for the FOMC interest rate decision. I charge a couple of bucks just so I can really track who's actually attending and cares and interested and all that kind of stuff. Interesting number. Yeah, I just went. So anyways, so let sign up for that. Let me get some coffee going. Let me use the restroom, throw some water on my face. We'll be back for ADP. We'll catch that number. We'll do our webinar, and then this is all good to go for this afternoon, which, of course, is the main event. So, cool. Sign up. We'll get going in 4 minutes, 3.5 minutes, and the news is in 4 minutes. All right. See you in, 180 seconds. All right. Was that 180 seconds? Jim's front row. Front row's better than skid row, that's for sure. All right, so guten Morgen, comment allez-vous? How are you? Okay, let me get that out of the way. Okay, let me close that window. All right, so let's get on with it. You know the routine. This is not your first rodeo. Welcome to Forex.Today, the YouTube community of more than 20,000, almost 21,000 foreign exchange traders gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Nice to meet you. Nice to see you. Today's a good day to be alive, memento mori, which means be grateful that we have this opportunity to be together today to do ADP. And I got to go ADP in about 30 seconds, and then non-farm payrolls live, or sorry, FOMC live if you want to do that later. Let's go to the live screen. Okay. All right, so let's get the news. Let's get the news. I think it just popped. And let's see what we got. If you have the news, you let Uncle Wayne know what the number is. I'm trying to even get a calendar up. Did it come out? I don't even have a proper calendar. All right, so did it just come out 107? Sorry, you probably already typed it in the chat. I don't even know where the chat is anymore. All right, hang on. I got too many windows open. Yeah, 107. Thank you, Lucas. Sorry, now I have a chat. Yeah, I concur, Lucas. I concur. I concur. Let's see the reaction. Let's go over to the short-term indices. And a little bit of weakness. I suppose this is being interpreted as good. It's a lower number. Okay. We expected about $1.50 on this thing. That's what we got last time, and over the course of time. It's been 150. And so 107 is low, which is going to tell people, hey, the Fed could cut interest rates later today. Can you imagine? That would be the reason why the Fed cuts. But whatever. It doesn't hurt. No harm, no foul. So if it doesn't hurt, then it's good. That which does not kill me makes the dollar weaker. Something like that. So anywho, not bad news, I guess, is the only thing you could say. Not bad news. Little rebound in the stock markets. S&P 500 currently on the 4-hour 21, bruh. Yeah. Very cool. Can't believe it's Wednesday already. So much going on in the world. What a great time to be alive. Okay, a big bouncy bounce, but if you were going to trade this technically, let me do it this way. Let me just move this. Okay. And that sets it up. Roll over, Rover. That's what it says technically on the 4-hour anyways. Daily, yeah, it'll be all the way down for a while. So that's how it plays here. And so what that sets up for me is the possibility to hedge later today. So I might take a triple leverage short or a no leverage short on the NASI today. Dow is performing the best because it's got the lowest vol, lowest beta. S&P 500 is doing just fine, which has got the balanced beta. And NASDAQ having the lower low after a double top, which represents the highest beta. So if you've taken the stock trading course, you know exactly what I'm talking about. Yeah. I want to do some more on that. I know I keep saying that, but I want to do some more. So a few other things I'd like to say in that course. Okay, so how would you thread this needle? Something like this. Boop, boo, doo, doo. Huh? What do you stink? Smell like a plan? Yeah, tomorrow will be in Feb. Yeah, that's for sure. Yeah, you have a slight gap on your chart. Yeah, well, that wouldn't bother me nonetheless, or any. I mean, I don't make a decision on like, oh, I see a little gap on the 15-minute chart. To me, it's irrelevant. Okay. So, like earlier today, I covered footsie. Oh yeah, I didn't upload the video. See, at least half the time I don't upload the video to the Quant Box YouTube account. I do them live for Quant Box subscribers. So one of the things I already did today is we took a look at this footsie. Yeah. And well, I suppose if I take the time to upload that video, you would find the secret. The secret to footsie. Does it usually go up from here or down from here? Ha 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 ha. We know that week by week. Week by week. So we kind of have a 4-week plan for footsie right now. Thank you, Quant Box. Oh, sorry. Oh, my neck is so sore. So, looking around, seeing how no one's reacting negatively to that news. I lost my trade on the Hong Kong stock market. It came back and knocked me out of break even. And the funny thing is we're right on the price. I mean, that I believe this was the price I was long, because I caught a higher high, higher low, higher high, higher low. And so now we're all the way back. So who knows? I might do a 5A cross up and try to get back in. We'll see. It was a play off the Chinese stimulus package. G'day, Johnny. Yeah, Thabo, the reason I feel like that, like a slight gap on a 50, I don't trade that way. I'm a macroeconomic trend trader. I know a lot of people make such things like that you're calling, they make them a big deal. I don't make them a big deal. I don't make decisions that way. So, I'm not saying I'm right and they're wrong. I'm just telling you, like, from my point of view, from my perspective, I wouldn't do anything if I spotted a small gap. Like, this doesn't mean anything to me. I don't care. What I care about is, I bought it earlier, and based on, suppose you could call it a pattern, right? The higher high, higher low, bought it. But I bought it fundamentally because there was a Chinese stimulus package talked about, right? I also knew that this was resistance, and I had it all marked. And I was hoping, based on the news, and that was part of the strategy, that it would actually make a higher high, higher low, as indicated here. That's the pullback. We never got that. All it did was get to resistance, and then, and then the whole thing fizzled out. Okay? And now I'm trying to decide, do I try again? Do I let it double bottom? Which price at what time? But again, the individual little gaps and little candlesticks and little patterns and, no. I'm trying to decide, do I want to try again based on the idea of a Chinese stimulus package is imminent and it's going to turn the economy around, or at least the stock market? Some of this is this negative move towards my positive entry, right? The counter equal and opposite force here, I think has a lot to do with the liquidation of Evergrande properties. So I caught one rumor and got crushed by the other. Nothing ventured, nothing gained, right? I had the opportunity. It didn't cost me anything. Cool. All right. So now the question is that overplayed, and is the stimulus package more important? Once again, I'm not trading like patterns and I'm like, all that kind of stuff. No, I'm trading, let's say, I don't mean patterns are not rational, but rational meaning I'm trading a thought process based on macroeconomic data. So my thought process now is, if it crosses up, do I take it another shot? Or if it double bottoms, do I take another shot? Well, this is a reasonable trade. And this is a reasonable trade. And if I'm a bull, I have permission to buy the higher low or buy the double bottom. So I'm like, yeah, I'll probably do it. Right? So, I try to get to make the decision now, like, yeah, I'll probably do it. So now it's an if-then statement. So if this holds and I get a 21.55 cross, I could buy the dip and take it north. And that'd be my day trade. That'd be my trade of the day. It could turn into a swing trade, my swing trade of the week. And if it doesn't work, I'll lose a little bit of money or break even. And yeah, that's that. That's how I make my decision. So if I explained the loss to, let's say, a client, let's say I placed that trade and I lost it, and the client had questions, I'm like, oh, well, I was in a good trade based on Chinese stimulus. And the issue is, if I go back to like 4 hour, the initial trade was aggressive because we were clearly in a downtrend. But based on the double bottom, and I have to back out even further on a daily chart. I have to go all the way to daily. Okay, all right, let's back in now. Okay, so I know it's clearly been a downtrend as marked by my price action pivot points. But I also know it's a double bottom, so I have permission. And at this exact time on this shoulder, we had renminbi. Maybe I'll label this different. It was People's Bank of China, PBOC. All right, so the PBOC is stepping in on a double bottom. Do I have permission to engage? Yes. It's a downtrend. It's risky. I know, but it's a double bottom with the People's Bank of China. So how did I enter the trade? Higher, high, higher, low, long. All right, cool. I thought it'd go higher by now, but that part's wrong. So do I still have permission? Well, in fact, a double bottom is even better, really, if you think about it. A double bottom of a double bottom is something that I've been preaching forever, right? The double bottom of a double bottom. Yeah, fine, great, cool, right on. So that means I have two more opportunities as a bull. Somewhere in here I buy, or somewhere in here I buy, but that won't be this week. That'll be next week. Oh, nice, good. Oh my God. What do you guys think? What do you guys think? Just in general. It doesn't matter if you think Chinese stimulus and all that, but just the process. Do you like the process? I want you to have good processes. Yes. Good processes. Which reminds me, 1 week from now, we're going to do a special event. Okay? The renewed unveiling of FXBootcamp.com. So Wednesday next week, probably around noon, around the London close. I haven't scheduled it yet, but that seems about right. Maybe a little earlier, maybe 11 a.m. And the official relaunching of FX Bootcamp. In the past, it was video training and me explaining the importance of a 5/8 cross and how oil impacts the Canadian dollar. Lots of let me explain you stuff. FX Bootcamp has been reorganized as a performance coaching service provider. And it's highly focused on processes. So it's focused on what are you going to do in the next 2 hours. That's it. Live. There's all live. There's no video course. There's no nothing. So that'll be officially launched. We've been running it a month or two now. A month. So get ready. Be a cool event next week, and we'll give you the details, the down low. Cool. Exciting, man. That's my baby. It's cool. I mean, you think about it. Not many businesses make it 20 years, huh? Yeah, that's cool. And so now, this is sort of like it. How you say? It's always been focused on live training, but now, it's more like you can just join for 3 months and clean up your process, strengthen your abilities, identify your weaknesses, improve your game. You just come in for 3 months and then go. Cool. I really love it. All right. Let's just kind of do around the world. Remember, today is about FOMC. How many people have signed up for the event? Remember, I'm going to do it live at Quant Box. We'll start at 1:30. I typically do an overview of monetary policy, just so you understand the impact of the FOMC's decisions. Then at 2, we get the news statement, in which I want to go through and look for specific wording and changes in the wording. Then at 2:30 is the press conference. And what's most important is the Q&A. And once again, I have to translate all that into English. And then we should be done around 3:30. So it'll be 2 hours of your life. And I believe I charged, what was it, $5.55? $5.55. I just wanted to charge something so I can track who actually attends. So, for example, if no one shows up, then, I don't have to do this. I can do something else. Yeah. Oh, 444? Oh, okay, 444. So it's I'll put that into the Chateauneuf de Pape Fund. Cool. S&P 500 flipping here. Flipping, that means Nassie's going to get hit remember, it could be hedging day. Now notice that we went up to the X and stopped. Oh God. Yeah. What a nice X. Huh. The power of the X, as Elon would know. It's not Elon, it's Elon. All right, Elon. Okay, but nice X, huh? It's good to have such good X. Very X-y. Okay, interesting. So people are still thinking the Fed ain't gonna do the cut. But let's be clear, and this is where I think a lot of people miss the boat. Nobody cares about the interest rate decision today. We're not even thinking about that. That's what you should have done last meeting. Okay? This meeting is about the next meeting. And people are looking at this like, oh, well, ADP was good, but then on the other hand, right? And they're making these decisions. Well, maybe March is too early, and now maybe it's. I hear people talk about May, and I'm like, May? Fed doesn't do that on a May meeting. They're looking at things like a calendar, and they're saying, well, if we squeeze in 4 cuts, it would be so many dates. Well, if they do 5, they'll be on these dates. They're not, it's like you hear these economists, and maybe it is May, I don't know, but you hear these economists and they're like, well, we're guessing the Fed's going to cut 4 times. They're only telling us 3 times, but then in the March meeting, then they're going to change their yield curve and then have more cuts, and those therefore will pull it forward, and therefore it'll be May, June, blah, 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 blah. And it sounds very logical. And maybe it is, maybe they're right. But what they're skipping is the Fed typically doesn't do that kind of decision in May. Typically, the Fed would make that decision in June. So now you'd have to say, well, okay, this mathematical model might make sense if you get all those variables right, but it doesn't fit the personality of the Fed, which is not in the data, is it? So all of a sudden, nerds playing with their mathy models are predicting the future, and it all makes total sense, but it doesn't fit the personality. So, that kind of thing. So more likely, I would say they would warn us in May and cut in June, for example. Why June and not May? Does anybody know? Besides, like the Fed doesn't usually. Well, why does the Fed not usually do such a thing? Why would the Fed not usually do something in May? What's the difference between the May meeting and the June meeting? No. No, SEP. Thank you. Yes. Yeah, Summer says sell in May and go away. I like buying in May and going away. I also like buying in March. But yes, it is definitely related to the SEP. So they warn us in May and say, if the data allows us, we could consider it in the June meeting. And then June comes out, issues a new SEP. Yes, boom. We all think it's time to cut. And then it's cut. It's that rationale. It doesn't fit a mathematical model, but that's usually how the Fed works. And so again, I might be wrong. I don't know the future, but it's interesting when you hear these experts. It's like they just got out of school. They know all the math. They know all the model, right? They know all the models, but they don't have any experience. So they fit their thesis into a model, but the model should be different, right? You see? The model should represent reality and not the mathematical assumption. But anyways, the world ain't perfect like a model, huh? Dollar weak, yen doing nothing. Right? No, well, that's the other thing, Richard. So, like, and I think that's why you're teeing this up. You know what my speech is going to be, but I won't do the speech. But it's this idea like the inverted yield curve means recession is imminent. No. It does tell you something is abnormal in the market, for sure. But then you have to understand, well, what is happening to the market to make the curve invert? Normally, it's an economy that is changing, and in particular negatively, and impacting cash flow, money flow from one asset class to another. Okay, great. Then that would be indicative of a recession. People are moving money around from risk on to risk off. That would be it. But what if the central government and the central bank are manipulating the market for some outcome, some objective? So if the government is the major player in the 210, does the inversion actually mean recession, or does it mean the abnormality is the central bank and the central government manipulating? Well, it means the central bank's manipulating. It means the central government's manipulating. If it's inverted because a whole bunch of money is going to one type of treasury or one type of bond, but the major player is the government, well, then it doesn't represent recession is imminent. Now, if it was institutional investors and they were moving money from risk on to risk off, yeah, well, then that inversion would be very relevant. But I don't believe that's necessarily the case. So it's very unreliable. But then you hear experts, and they did this back in like 2018, it inverted, and everyone was freaking out like, oh my God, a recession is imminent. And all the highly educated kids with no experience at banks started talking about what they were taught in school. It means recession. But they didn't understand the context of the inversion. And they were all wrong. The stock market went up another couple of years and would have kept going up, except we ran into COVID. So once again, like if the model, in this case, in the inverted yield curve, right? Let's call that a pattern. Don't memorize patterns. Understand the context of the market first and foremost, and then understand how the pattern fits into that context. And you will be more consistent. Yeah. Yeah. Let's while this fizzles, because remember the big event is later today, so don't get all excited. Round 3 maybe. Round 3. So this goes back a couple of days. I've drawn this for you. And one more chance for an up. Once again, I covered this privately at Quant Box. in today's video. I talked about my WTI and some of the thoughts that I did in my research last night. Yeah, so I'm still long. Where am I? There I am. So I'm just below the February central pivot. Okay. And so if this recovers and becomes, if it recovers, I'm not saying it will, I want it to. If it recovers, it'll end up being an out of position trade. And so that changes the price and the time of my target. If it collapses, I don't want to be in it anyways because it could end up being an M3, M1, and I don't want that. Okay. Green, tell me why you would want to trade gold since gold hasn't done anything for 3 or 4 or 5 weeks. What is your interest in gold? You think it's going to move? You think it's going to break out? Is there a particular reason why? I mean, it's okay. Like, I'm not saying one or the other, but I want to know the rationale. So if we go further back, okay. Let's talk about this, this asset. So January of last year, up to the M3, down to the M1. So nothing or down to the central pivot. So after 3 months, nothing happened. Then it went up to R1, and then over 6 or 7 months dropped all the way back to the central again. So now 7 months went by, nothing happened. Then we have up, down, big rally to a double top of last year and the year before's high, which could ultimately say from, this was January, so Jan of 2022 to April 2023 to Jan 2024, nothing's happened. So, okay. So, yeah. Why do you want to trade it? So you think this time it's going to break out, I guess. Okay. Well, the logical trade then, okay, the logical trade for you is that, here, I have a horizontal line. I'll get rid of it. Or I'll move a couple of these things. No, I don't want to move that. We'll move that. And we'll move this up to, well, no, I'll delete that. If I can, delete it. I'll delete the vertical line. This is all previous analysis. So let's take a freshy look. I'll get rid of this as well. I got to get rid of that. There's so much going on. Delete. Still one there. Let's get rid of that. Delete. What's it deleting? Is it not deleting? There we go. All right, so there we go. So if you are a bull, then your trade, it looks like that. All right. There are two scenarios in which that will happen. One, we have an unbelievable year in the stock market this year. Despite the Fed, despite the election, despite seasonality on the election years, despite geopolitical risk, we just have an unbelievable year. And that creates wealth, the household wealth effect. So in a scenario like that, when you think of gold, just imagine in years like that, unusually good years, demand for gold picks up because you're buying more cars that have gold in the electronics. You buy more TVs and computers with more electronics in it. You buy a gold Rolex this year because you're just crushing it in the stock market. So on and so forth. Demand for gold goes up, just on aggregate demand. Well, that would be very strange. That would be very unusual, in particular in the fourth year of a 4-year political cycle. And of course, it hasn't happened in the last 4 or 5 years. So why would it happen in a year where it normally wouldn't? Okay, so I'd say that's actually unlikely, but can happen. The second narrative that could create that up is that inflation comes back. And CPI, PPI, so on and so forth, continue to go up. And particularly commodity-based. So oil needs to go up and then food needs to go up. Although food is really, really low. Many commodities are low. In fact, the largest lithium producer in the world has laid off 20% of their workforce last week because nobody in China is buying new EVs, the leader in the EV market. So there's the demand for electric vehicle batteries has collapsed. And lithium prices are in the toilet. But if suddenly demand somehow comes back or there's a supply chain issue, which most central banks say have been fixed, so it's most likely going to be energy related, not food. Now, we are seeing food inflation. I think it was 6% and 5% in Canada, the United States, and in Europe. But in New Zealand, they actually have negative 6% food inflation. Huh. All right, so so maybe food inflation in the United States, but farmers never get the good end of the stick. They usually get the bad end. So I just, growing up with farmers, I just can't believe suddenly they're going to get a good deal on food prices. So I'm like, okay, then it's going to be energy related. Okay, and that's why I'm buying oil to hedge. If oil prices go up, you might as well own oil. All right, cool. So for you to buy gold, I think you really want to buy oil, but you're trying to say gold is going to make a higher high that it couldn't do over the last 5 years or even ever. You're predicting this will go to an all-time high in a year in which it doesn't ever go up. So then the only reason it would go up is that inflation increases. Now remember, people bought gold when we had 8 and 9 and 7% inflation. Well, now the highest inflation in the world is at 4%. And, the United States is at 3%, Europe is at 2 something. And so I guess you're saying like European inflation is going to go from 2.5 to 4, and the United States is going to go from 3.5 to 5. Well, in that case, you would want to buy gold. But right now, I think there's some possibility to that. I don't think so. I don't see it. We still have wage inflation and rent, but that's not likely to create rampant inflation in which you would need to hedge it with gold. So I kind of go back to like, I don't really get that narrative. I'm not buying into that yet. But if you did your research and you could argue it, then by all means. But then if I can't set that up, then I'm more interested in like something like this, where maybe we retest 2,100, but by and large, we work our way back down towards the floor of this range, which has been going on for years. So we back out and we look at it sort of like, well, M2 predicts M3 predicts M1. So that says that gets us down to 1,800 by the end of the year. Those are my thoughts. But statistically, it's probably not a great trade. So you might spend your whole time trading gold, and you might say things like, oh, but Wayne, if you buy here and sell here and buy here and sell here and buy here and sell here, this is great. Well, that might be true. That might actually be true. But I can also tell you, if you had looked at other assets, you would have had better opportunities. So you're underperforming in your asset selection. Okay. Now, Richard, do you think the Saudis are putting a cap on oil? I answered that. I directly answered that in today's Quant Box video. Okay. So green melon, was that helpful? It was a little pissy, I know, but I hope you found it. Well, at least you know my point of view anyways, and hopefully me explaining my point of view and not necessarily just a trade setup. You could even agree to disagree, but at least you understand my process. Yeah, cool. Now, I find that people trade gold because they just always trade gold. Like people always trade euro dollar, even if it's the dumbest thing you could be doing. People just get into these habits. I like to trade gold because I like to trade gold. That's a silly reason to trade gold. You should trade gold or euro dollar or anything else for the prime directive of making profit. And one of the key parts of doing that is getting rid of 90% of your possibilities because they're not good, and boil it down to like the top 4 things you think you should do today, and only look at those assets. And that takes some research. That's how the Wayne do. Okay. You scalp gold? Yeah, I mean, again, I think you could probably do better somewhere else. Either in cost or volatility. I guess, like, let's add a few. So when we go to the bias pivots, let's do over the last couple of weeks. Okay. All right. So now you see, remember when I did this? Well, apparently that worked. But let's say you were a bull, because very often when I talk to people about gold, they only want to buy. When will gold go up? When will gold stop falling? When will gold make a higher high? That's how people talk to me about gold. So they're gold bugs. They only want to buy. All right, so buy. Buy. If you missed that one, buy. Or buy. If if you missed that one, or buy. Here's a buy. And who knows, maybe it'll come down and that'll be a buy. And tomorrow that'll be a buy. So I just automate the whole thing. I know my buying zone. That's the price I would pay for gold on that day. This is the price I'd pay for gold on that day. This is the price I'd pay for gold on that day. This is the price I'd pay for gold on that day. And now we are setting tomorrow's gold price. Okay? And it'll probably be closer to this, depending on how we play this top. Obviously, somebody cares about this, right? So it could do one of these now, of course, because that's a top. But you won't know, and if you're afraid of that, you'll never trade. So anyways, seems to me the future might look something like this. I don't know. But it doesn't look complicated to me, right? So in green, I'll highlight the profit zones. So going back to this this day, I don't know what day that was, but okay. There's the target, and we hit it. Sweet. Okay, great. So you're out, and then you buy this dip. You can see a lot of people took profit there. So let's say now you bought down here, and your target's up here because it's the next day. And currently obviously they took profit, it dropped. So now you're in here and your target is probably closer to this. I have to actually squeeze it in there. There it is. So your entries are not quite what you think. I mean, it depends on actually when you entered. Okay. This could have been an entry. This could have been an entry. This could have been an entry. So if you're scalping very often, you lost a whole bunch of money in here because it didn't break up. It didn't break down. You tried 3 or 4 times. Each time you jam your stop and you got these tiny little stop losses and all that kind of stuff. Versus, if you bought here, or bought here because you were a bull, well, your stop is probably here. Great. Your target originally was up here. So you carry that forward. Oh, so you hit here, you took profit. Now these are done. Okay. And your plan is to buy down here. Oh, look, you got it. Great. But your target's up here. So it comes up and up, oh, makes a higher high. Okay, you can move your stop to here now. Okay. Out. Done. Trade's done. But you also know, because remember, these green zones are set in stone. So you're up here taking profit. And then you're like, well, if it gets down to this price, I'd like to buy it. Oh, boom, you're in. Target is up here. So yesterday's afternoon trade is today's trade, and it just made a higher high. So now you can jam your stop up here, or at least break even. And so what are you doing today? You're going to ride it up. Okay? If it comes up here, your limit, you'll exit, and then your new trade will probably have a limit order sitting there for the next up. But of course, we know this is all going to be dictated by the Fed, so we don't know. Okay? We don't. We just simply don't know. Okay? But I do have it highlighted for you. We don't know, but I drew it for you. And check this out too, the other useful piece of information. Wow, what a random touch of a central pivot point. That's random. No, it's not, in fact, no. So a swing or position trade, if you're a bull, might be here, okay? Or the next part of that trade, if you're a bull, is this, which is, okay, the higher low. And now you're just swinging. Okay, now it's going to come up here. It's going to test that. Then it's going to come down here and test that. And then it's going to go up. and now you're just doing swing and position trades. Or you could just be doing day trades where, okay, you're up, you consolidate, okay, you reset off here, great, higher high, higher low, buy, 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 until that stops working. So you could day trade it, you can swing trade it, you can position trade it, but just know if you're a bull or a bear. And explain me why you're a bull or a bear. And if you can't put together a true narrative of why gold is going to go to an all-time high, then it's probably not going to go to an all-time high. Okay. Oh my God, that was so good! You should be smashing that like button. I don't even know why YouTubers say that. I don't even know. Does any of this crap work? Please like, subscribe, and comment. I don't think it's ever done anything to the algorithm. But whatever. I think that was good. I'm liking it myself. Hey, I'm an only child. I'm not ashamed of such things. Yeah. That was hard, though. That was hardcore, wasn't it? Damn, boy. Somebody's like, what do you think about gold? And I do that? That's the for shizzle, I think, but I don't know. I've never had a coach, so I'm doing the best I can. Do you guys want to just look at crap through the lens of AI? Do you want me to just show you what AI is thinking? Because the interesting thing about the AI I'm developing is it doesn't trade like me. Do you want to see a different way of trading? I'm not going to show you because I don't have good capability for that. But I can draw them as not my opinion. And this is the scary thing, like like tradeplans.ai writes emails, but I don't know what it writes. It's scary running an AI firm. Like, I don't know what it thinks. It's AI. I mean, it could just decide to tell dirty jokes. Huh? Dirty jokes. Well, I actually, Roderick, I read one on a post I did recently, and I didn't like the way it wrote it. So, but I've been too busy to meet with that development team. They're in Hong Kong. So I have like 3 AI teams now. Oh my God. Oh my God. What a world. What a life. I talked to people in 7 different countries yesterday. I'm guessing it was 7. It could have been 9. It's just one of those things like, what an interesting world, huh? Life is so wonderful. That used to be a difficult thing, and now it's just an ordinary thing. So anyways, what I can do, because look, really, I really just want to shut down. So I'm trying to come up with a reason to not shut down. Why shut down? Dude, this is a FOMC morning. Like, nothing really matters right now. Everything is jostling for position before the big event. Okay? It's not normal life. Imagine you knew in advance that in 5 hours there was going to be a massive earthquake. So what do? Go about your day as usual? No, you're like, I think I'm going to do something. I'm going to prepare. I think I'll take the day off from work, and I'll get some water and some food and some supplies, and Maybe I'll get some first aid stuff. And then you go to the grocery store and everyone else is already clearing out the shelves. They were there yesterday clearing out the shelves. You're like, damn! And now you're just buying baby formula and stuff because you can't get water. Well, maybe you can trade baby formula for water. I don't know. And you're just grabbing crap, right? But you want to just go through today like it's a regular day? Doesn't make sense, right? So this is why I kind of like, I don't feel like doing anything because like, why does it matter if it's all going to change, right? So how about this? I can go through, you ask me, I can do almost any stock in the world, almost any commodity in the world. I would say virtually every, it's got to be virtually every currency pair in the world, even stuff we don't care about. I have it because it's just data. I can do, I said commodities, I said stocks. Oh, I can do almost any crypto stuff I've never even heard of. We've been feeding the database. So if we can do whatever you want, and what I'll do is I'll tell you the probabilities and I'll draw out the technicals. Remember, the AI is really focused on scalping, intraday, and maybe a day trade. It's really short term. And you know, I'm macro. I'm a big boy. This is like really not my style of trading, but again, I already have a me. So this is kind of interesting if you want to see what AI is thinking. And this is becoming a service that should be available, I don't know, in a couple of months. I'm going to release this as a new service. Can you imagine? Like it can do technical analysis on all time frames and all assets. So let's do a vote. Let's see what you guys want me to cover. Again, it could be almost any stock. Okay. The company is going to be called Tradar, by the way. You get it? Not trader, Tradar. Trader Capital Management. It's cool, right? Because it's a radar for traders. It's watching every market in real time on multiple time frames. Yeah, it'll do that. What else? Not many people are. What do you want me to cover, guys? If nobody's saying anything, if we're done, we're done. I got work to do before the meeting today, and I suppose it'd be a good morning for a cigar. Euro, Turkish lira, Solano. How much would that be? I'm still debating. The problem with the service is it's very expensive. It's very expensive. And I've been working on ways to launch it despite all that. Despite a cold, they call this a cold start when you're a startup. So you guys know I'm a Silicon Valley high-tech entrepreneur and venture capitalist. I also knew a lot of angel investors. A lot. I knew people on the Band of Angels, for example. And anyways, I don't even know if these things exist anymore in the Silicon Valley, but this is where I come from. And so in the world of high-tech investing and entrepreneurship, there's this thing called a cold start where you spend $1 bajillion building the first version of your new tech that no one's seen before, kind of thing, right? And when you finally get it, it'll be primitive because you haven't ironed the bugs out. but it'll do the basic thing that you're trying to achieve. Of course, in 5 or 6 or 7 or 8 years, you'll refine it and add more features. But in the beginning, you got to spend a lot of time building the technology, right? You have to create all this intellectual property and get it to function at some level to provide a service. So you'll spend 5 million, 10 million, 15 million, 20 million, whatever it is, right? Great. Then you got to go sell it to somebody. Well, hell's bells. You start selling it and it's not even close enough to cover your costs. So then you have to look at your burn rate. All right, how much cash are you burning every month? And how much revenue do you come in? And how much are you willing to lose every month? So if you're going to lose a certain amount every month, but then let's say every month you have 5% more revenue, you need to do calculations to find out, well, are you burning so much cash that on month 11 you run out of cash? Or is it month 18? Or is it month 4? Right? And, so you have to then calculate all these burn rates. And let's just say you might have really good tech, but you may never get past the point of being able to afford developing the technology in the first place. Okay? So very often the astute thing is be the second company. Okay? The second company comes in and talks to right? And then in this case, imagine you're a venture capitalist now. And the venture capitalist says, I'm not going to pick seed level companies. Seed, these are like the ones that are just developing the service. You want to find companies with good ideas, with good people that built good tech, but then ran out of money. Because it's somebody else's money. So they might have spent $10 million building the tech, and then they couldn't sell it. Well, it's not your fault they couldn't sell it. It's not their fault. They couldn't sell it. So they missed something. They missed the boat. Maybe they're good engineers and they suck at selling. Who knows? It doesn't even matter. But you believe in the idea and you believe in the tech. So as the second VC comes in and buys the company for pennies on the dollar from the first investors. The first investors are going to say, oh my God, but we put $10 million into this. So you got to pay us, at least 2x. You got to pay us $20 million. You're like, look, let me tell you what I'm going to pay for this. I will give you $1 million. Because if you can't sell it, it ain't worth jack, right? That kind of thing, right? And so you got to and therefore then the numbers might work. And then you can say, well, then my run rate and my burn rate, they don't converge to the point where on month 11, we run out of the cash and then we go bankrupt because you paid 10 or 20 for this, right? No. And plus, if you paid 10 or 20, now you got to charge a really high price because you got to cover your expenses and kill your burn rate. You actually have to become profitable, right? So anyway, so you reverse all this. If you paid 20, the second company would fail. So what you got to do is you got to buy it for 1 or 2, and then the numbers could work out. So now you got half decent tech, then you go out and sell it, and then you come back and reinvest to get it even better, which helps it sell even more. And then you have more profitability, and then maybe you can hire some staff, which gives you better service, which then you can get more customers. Therefore, you can take that and build on the tech. And all of a sudden, you have a profitable company, you see? And so that's the trick to all of this. And that's the difference between a good Silicon Valley investor and what most do, which is just raise lots of money from dumb people and then take all the money and spend it poorly on mediocre ideas or even dumb ideas. That's what most people do. Most venture capitalists fail because they're not very good investors. Yeah, it's amazing, right? So anyways, so there's great tech out there. Yeah, yeah, this is good. This is good. So I have to work out a way, and I believe I have, to be able to do this for us. Because I'll tell you what, I'm being greedy. I'm being selfish. I just want it. And I believe you want it too. We want it. We just want this. So we need to find a way to make that happen. So maybe it's like $100 a month. But it'll look at, let's say, 6,000 trading opportunities today. And out of 6,000, it tells you, here's the 6 you should look at. And here's the probability of success and the pattern. And it doesn't know fundamentals. It only knows past performance. So it doesn't predict future results, but it will say, hey man, I just looked at 6,000, or actually, hey man, I've been watching 6,000 different things overnight on multiple time frames. And I've been looking for 8 patterns. And then I look at how on these assets, when I find the 8 patterns, which ones have consistently worked and which ones are just gibberish. And out of that, I've picked the 6 best that you should look at. I'll tell you what they are. It could be commodities, it could be currencies, it could be right? It could be stocks. And then out of that, of these 6 patterns of these 8 patterns that I found on 6 assets on the 3 or 4 different time frames, these are the ones you should look at. And based on seeing these patterns over the last, let's say, 5 years, I've seen these patterns multiple times on this date, 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 on this date. So it looks and remembers at all those things. And of these 6 patterns, pattern 1 has worked 62% of the time. The other one has worked 71. This one's been 58, and so on and so forth. And then you revise it, and you're like, hey, Tradar, only tell me of these 6, only tell me the ones that have worked greater than 60% of the time. And then you change it. No, forget that, trader. Hey, trader, tell me the ones that have worked 70% of the time or greater. And then now it gets you down to 2 patterns. Oh, 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 oh God. Nothing but click, 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 click. Little, huh? Yeah. Oh my God. Huh? Mercy. Mercy. Allah go. Where we go. It's pronto. You're like, oh my God, seriously? Yeah. So I got this. I'm looking at it right now. So let's see what you said. Peso. Man, you guys are all over the place. Peso. Yen, wheat, corn, soybeans, feeder cattle. Yeah, that, you know what? Good, Lucas, good. I don't know, honestly. Wheat and corn, maybe soybeans, maybe feeder cattle. I don't know, but that's super interesting, man. I don't know. I don't know if we got that. Yeah. I think it's mostly gold and oil and silver for commodities, but I don't know. So I don't know. I don't think so. But let me talk to the developers. Can we just turn that on? Can we plug that in? Do we have the numbers? See, if we got the numbers, I think it could be done. Okay. All right. Pound dollar, I guess. JGB says GD. Pound dollar, I guess. Jim's like spot. Spot what? All right. Interesting. Let's do, first of all, let me check the commodities one. The silver Brent. I don't think I have. softs and stuff like that. I don't think there's sugar. No, I think it's just gold, oil, nat gas, maybe. Yeah, that's too bad actually, but I might be able to turn that on. Hang on. I think I can go into the back office. Let me go into the back office. How do we do that? Oh, neato. Sorry, I'm in the back office and I can turn things on and off. No, commodities, crypto commodities. No, that's a hard no. Brent, gold, and spot prices, Jim. Nat gas, silver, and WTI. Okay, no. Crypto, there's a, what is it? What did they say? A crap ton? There's a crap ton of stuff on there. I can even do Bitcoin priced in yen. 6 million yen for a Bitcoin. Forex, some majors and crosses. That's good. Stocks. How many people would use this to trade individual stocks? Not stock indices, because I have stock indices on this. It's just candlestick data. But like Netflix, Nike, Nvidia, PayPal, Pfizer, Tesla, Visa. Starting at the top, Adobe, Advanced Micro Devices, which is I think down 6% today. Alibaba, Amazon, Apple, Baidu, Berkshire Hathaway, Broadcom, Chevron, ExxonMobil, Google, Intel, Meta, Microsoft, Moderna. Oh, I see. Spotify. No, I ain't got no Spotify. You guys wouldn't do stocks, huh? You can do ASX, CAC, DAX, Dow, FTSE, NASI, Nikkei, and S&P 500. Sweet. Yeah. Anyways, all right. So nobody picked anything specific. Let me just see what it thinks. How about that? Um, let's pick let's pick Forex with a 75% chance of working out. And let's see if I like anything. I think when you go higher probability, you get smaller trades. Like Kiwi. See, I don't like the setup. It's so funny. It's saying Kiwi dollar is one. Okay. Yeah. Hang on. My phone is just on fire. Cool. Anyways. All right. So I see. I know I don't like it. But see, this was 20 hours ago, so things had changed. And that's the thing. But anyways, it was saying 20 hours ago, so it's already old. And of course, now we have the news. Okay, risk on. Imagine the stock market's going to open in a couple minutes and it's showing bid. But it was saying, what was it looking at? 61.40, 61 and a half. Is that what this is? Yeah, 61 and a half. And it was saying that it could drop to 61.03. And it didn't, or did it? And it said there was an 80% chance. Target 61.03. So let's do that. The way you get this is you open up the properties and you go 0.6103. And it missed it. See how close it got? 1, 2, 3, 4, 5. Yeah, it was close. So it was saying, and what did it? 61.24. Yeah, it was going for this, and it missed it by 7 pips. Very short term. Now, I wouldn't have done a trade like that. That's the interesting and yet scary thing. Okay. And remember, it's not even thinking like, oh, there'll be news tomorrow and all that kind of stuff. No. It's just a pattern. So it got pretty close. It seems like it wasn't terrible. We have a Euro Swissy at 80%. We can go over there and take a look. Euro Swissy. Euro Swissy. All right, let me try to, what's it thinking? It has a line at 160.38. So let's just put that line there. 160.38. 1.6038? Yeah. No, just 160.38. 160.38. Is that right? No. What am I looking at? I must be, and that's an Aussie dollar. Oh, sorry, wrong one. Aussie dollar, sorry. Aussie dollar. Aussie dollar. All right, so let's do this again. 90. So I was looking at something above that. 93.73. No. What am I looking at? I'm reading everything wrong. Oh, I see what it's doing. It's interesting. Yeah, okay, I'd like to make this more clear. 93. So they put that there. Euro Swissy is 93, right? Euro Swissy is 93. Didn't we just do that? It's displaying it in a way that I wouldn't have done it that way. So I don't want that written that way. Sorry, my bad. 93. Yeah, okay, so it puts that there. Interesting. Euro Swissy, 93.73 is a line. 93.73. So let's clean this up. Sorry. I'm looking at the back office, so it's, chunky. Simple. Let's just do simple. All right. So the key number that it's looking at, 93.73, which I've said 15 times. All right, 93.73. 93.73 is a number that seems technically important to it. All right, okay, I can see that. All right, so this came out, that's Euro Swissy, so it's posted here, up. I have to look up now. Okay, at 6 o'clock this morning, 6 a.m. So this is the 9876. So, okay. It was saying 93.45. 93.41. That's pretty close. Okay, 95. 93.95. Okay, so we caught it. 93.95. 93 and target 93.73. There we go. And it believes, based on its analysis, 80% chance. That's what it's thinking. Remember, it doesn't think, it's actually calculating, if you will, based on its calculations of past performance, which does not predict future results. It's saying this. And it says it will take 3 days. Within 3 days. And it's using an hourly chart. So it literally looked at this. So in here, it said, let it drop to this price. And then this should be the outcome. And it looks like it was good on the entry. Okay. What do you guys think? This was a predicted entry 3 hours early. And then the exit. Okay. Okay, we'll see. Yeah, it is very interesting. Again, it's not necessarily my style of trading. Of course, you know, I'm very sensitive to today's data. And yeah, that's interesting. The markets are really behaving strangely. So you got dollar weakness, but this ain't going up. Okay, look at my little setup here. Okay, no AI, baby. Okay, definitely, right? Lower high, or sorry, lower low, lower high. All right, so let's look at a commodity and see what it's doing in commodities. Let me just pick random things. Gold. All right, let's do a gold. Since we've already looked at it, let's see what AI thinks. So we go to gold, and it's looking at gold on the 4 hour. Oh, nice. Okay, so let's get rid of this. What is it thinking about gold? So gold, oh, that was a long, oh yeah, well, it was a long time ago. 2000. Did it drop that low? So it has an entry of 2001. But were we down there? 2001. It says 2001.85. Did we even get down there? Oh, well, I guess so. All right, so it buy at the central. Okay, I get it. If you're a bull, it's drawing it as a wedge though, or a flag. It's looking at November low. So I'm gonna have to redraw some of this. Hang on. Do I want to kill this? I guess so. All right, so it's looking at it from this point of view. June, no, November, that must be the low. And then the spike high. And then the drop. Is it from here, September? I guess it's this one. All right, so it's looking at this low. This high. And the one down at 29, is that right? No. $11, $12, $12, $11, $12, December. Oh, I'm on weekly. No wonder it's so hard. The November. Okay, it's only looking at that. Okay, that makes sense. All right. It's looking at this to this to this. Yeah, okay, that matches. Okay, so let's just change that. It's a little too dark. Okay, so it's looking at this. This is how it's analyzing. And the way it's drawing it, let's get rid of that now. Delete. All right, it's saying up to 2070. 2070, and it has a range to 2930. What? 2130, sorry. 21. All right. So it looks like this. So the AI would give you a picture like this. Okay. And it suggested, what was it? $2,001.85. Like right there. And it's saying a 67% chance that it goes up $130. And so it actually draws this pattern. Okay. It actually would look like this. Oops. That's what it looks like. It even draws this target and everything. It's got the little arrow. It's got a little target. I would tighten it up to 21 if I were to draw it. But, okay, I'd draw it like that. But nonetheless. What do you think? It took me a long time to do it. It's interesting that I didn't know it looked so much at 4-hour charts, but it actually did. It's saying my oil trade should go up to 87 to 91. So let's go look at my oil trade. So I have oil going up. It has oil going up, but I have a lot going on in my chart. So why don't we just clean it up? I'm going to go something different. I'm going to go swing trade bullish bias. Let's do it that way. All right. All right. So it is looking at it. Oh, it's Brent, though. It's Brent. It's looking at Brent. My oh my WTI. I have my oh my WTI. Okay. So it's saying a break above 77.31. And so it has this line, 77.31. Okay, with the break of 77.31. And by the way, we got this 2 days ago. Interesting. So it might have counted this as the break. Anyways, let's take a look. It is suggesting the conservative target is 87.23. Well, actually, let's do it this way. 87.23 to looks like 100. 87. 80. Ooh, it's not even on the chart. Hang on. Wow. Okay. I'm on a 15-minute. It's on a 4-hour. Okay, there we go. It's suggesting 87.23. Still not on the chart. Damn, boy. 87.23 to about 100. So I got to bring 100 on here. There we go. Really? 87.23, I guess would be about here. Up to that. And then what's it looking at? How far back is it looking? Oh yeah, it's looking this far out. It's looking from June. All right, so it's looking at the June lows. So I need one more click, but then that's going to be too much. Yeah. It's looking at the June lows. Okay. It sees the high. It sees the low. It sees this. And then around here, okay, it says up. All right, so cool. So now it's looking at that. And then we got to click in. And it says, literally draws it. It doesn't say it. Just draws this to this. All right. So that's what it's thinking. And I'll try to squeeze it in. Okay. And it says it'll take quite some time, 49 days. But there's a 77% chance that it goes to 87.23. So not a scalp at all. What was it? 77%. It draws it's drawn the horizontal line and the target and the box. So it looks very similar to that. What do you guys think? It's showing you, the horizontal line is showing you that it's been sideways off of a double bottom. So if it makes a higher high, think of it this way, I guess is what's happening. What it is probably thinking, because it's looking at past, but it's also looking at patterns. So I believe it's saying this is a double bottom. I believe what it's saying is this is the top. And that if you've respected the consolidation, breach, pullback long. But it's noticed it on the higher time frame. And a lot of retail traders might have missed it. I got it before the AI because I did the same thing, but on a different time frame. I took this trade, which I suppose is the same trade. I just have a lower breakout strategy, and it has the higher breakout strategy. Okay. So those are commodities. Yeah, interesting anyways. Let's do everybody's favorite euro dollar. Hourly chart on euro dollar shows downward upper slope going back a week. All right, so it's looking at this. And it's looking at this. Yeah, okay. All right, so it's zoomed into here on the hourly. All right, so this is what it's doing. And today at 9. So 50 minutes ago, I think it recognized this break. And then it has drawn an arrow to 108.87. 108.87. So 108.87, that's almost right, to 109.05. So it's got a target like this. And if I'm reading the database properly, no, 108. It's saying 108. 108.06. 108.06. Oops. See, the time must be, I'm looking at it, but it's a server time, so not 9 now. It must be 9 GMT. What am I, hang on, GMT time, 9, it's 2. So it's almost 3, but let's say it's in the 2 o'clock candle. 9 to 10, 10 to 11, 11 to 12, 12 to 1, 1 to 2. 5 candles back. Okay, that makes sense. So let's count these. 1, 2, 3, 4, 5. Did I get that right? Still off a little bit. Hang on. Yeah, okay. I think I figured it out. I know where their server is. That's interesting. All right, so 9 to 10, 10 to 11, 11 to 12, 12 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. It's either 8 or 9 candles ago. Let's say 8 candles ago. 1, 2, 3, 4, 5, 6, 7. Yeah, 8 or 9. Okay, that's actually right. Okay, I figured out where their server is. All right, well, I definitely don't want that time stamped if the server's sitting there. Okay, so that makes a lot more sense. So imagine at that time you had this drawn. Okay, and let me get back to the database. It said 67% chance. There we go. So that puts the other stuff in better context too. So you're getting more time. So yeah. Cool. And it sees a 73% trade on Aussie dollar. It sees a 69% chance on pound yen. And it's drawing all the trend lines. It's drawing all the arrows. It's drawing all the target boxes. 67% chance euro yen. 67% chance euro Swissy. 73% chance on a 4-hour euro Aussie. Which is interesting because Quant Box wants that to go up, but it hasn't been. So those are all the trades that are 60% probability or more. So I'm asking it, hey Tradar, tell me all Forex pairs that have a 60% chance or greater. And it gave me 1, 2, 3, 4, 5, 6 patterns. 6. That's it. Out of the entire Forex world, 6. At least out of majors and major crosses. If I go to 70%, there's 1, 2, 3, 4, still 6. Okay. It's the same. Let's go to 75. 1, 2, 3, 4. What? It's still providing? They're all that great. I guess so. 79, 79, 80, 80. I guess it further filters. That's interesting. How many 80%? 4. There's only... Okay, how about this? I'm not going to tell you what it says, but I'll tell you the probability. Euro Swissy, hourly chart. Euro yen, hourly chart. Aussie dollar, hourly chart. Euro dollar, hourly chart. Those are 4 patterns with greater than 80% probability based on past performance. All right, cool. I got to change their server time, though. Yeah. So that's Forex. I got to change the back office here. In commodities, let's do commodities 80%. There's only one. And I think it's failing. Just so you know, an 80% chance of success doesn't mean a 100% chance. Past performance does not predict future results. So it had an 81% chance of it coming down to $76.32, and it ain't happening. Stocks. Let's look at stocks. PayPal. Let's do this greater than 75% chance. None. Greater than 70%. There's 2 chances for the stock market right now. Okay. It has a ExxonMobil trade and it has an Alibaba trade. I'm not going to tell you which ones, but which direction, but just so you know. Boy, it helped refine things if you were already kind of looking to be in the market. PayPal, 68% chance of a particular move. AMD, 67% chance of a predicted move. Intel, some of these are nasty grams. Well, let me just say, of the 5, 3 are up and 2 are down. Oh God. So anyways, there's a trade on Intel. Alibaba already told you about. Exxon already told you about. So if you lower the standards, it pulls up PayPal, AMD, and Intel. And some of them are not up. Interesting, huh? Yeah, so anywho, yeah, so yeah, so that's happening, guys. That's happening. And so it updates all the time in real time. It's not like it just gives you a trade of the day type thing. It's updating all the time in real time. What do you think? Should I sink some money into it? Is this something that should be done? Yeah, two out of 60 people. Well, that's not very good statistics. $100. I don't know. I'm trying to figure out the model, but I don't want to make it too much. But it's got to be enough, you know. Yeah, $97. You know, something like that. You know, really depends. You know, the goal, like I said in the beginning, there's something called the burn rate. I just don't want to lose a ton of money. But is that too much though? Like, what were you guys thinking? Let's reverse this. What were you guys thinking? Don't worry if you said, well, I was thinking 150. I don't think I'll do 150. What were you thinking? You're like, I was thinking $19. You're like, $19? Well, it's just, I don't know if I could afford it, you know? This is all going to be built around you, so you got to let me know. Maybe it'll be 79. I think 97 is better, especially in the beginning. And then maybe in the future with future development, maybe there can be some upgrades or something that for people that really love it. But seriously, let me know a number. What do you think is the appropriate number? Remember, the trade-off is the lower the number, the less likely it'll happen. Look at this. We just hit target and it turned red. Look at that. Remember, the buy was here, and we just hit target and it stopped. It's almost pip to pip. Actually, that's pretty impressive. See, that's the thing. I don't think I would have done that trade. But that actually worked out. The one we're looking at actually worked out. Huh. Well, hell's bells. It's euro dollar, right? So what does it do? Does it leave it on there? Euro dollar 60-minute. No. Yeah, it's still there. Cool. All right, nobody wants to talk money. Okay. Well, unfortunately, it's all about the money. So I will continue the conversations and the work. 50. So like, put it that way. So like, Jim, in that case, we'd have to have twice as many people sign up to make it reasonable, kind of thing, right? So like, let's say I'll make up some numbers. Let's say I need 50 people at $97, but I need 100 people at $47. Well, if I can't get the 100 people, it can't be done. So it doesn't happen. Typically, what a company will do is they'll roll out a version, and it'll be at the higher price, 97. And then they will continue development, and then they'll do a premium version, so you can upgrade for 147. Someone said there must be a trial. No, here's the trial. I don't build it. There's no money in it. It'd be a waste of my time and my money. You know what I mean? So they're like, no, I don't want to lose money. So it just doesn't get done. The trial is it doesn't get done. So then you do a premium version second, and then you would do a basic version third, and then you have a value ladder, and everybody sorts themselves out. And Quant Box does it. So I could foresee that, but you don't get over the cold start problem. Right? You don't get over the cold start problem. So I think, what did we do at Quant Box? I think a whole bunch of people paid for a year in advance. And maybe we do something like that. So if it's $50 a month, then the first crew does $50 a month times 12. Something like that, right? Well, Kyle says, hey, you should just bundle everything together. Well, it's not that easy. I mean, it just truly isn't easy. There's different machines, there's different technologies, there's different servers, there's different platforms. They don't bundle well. I mean, it makes sense from a marketing point of view, sure. Like, for example, I could just pop it into Quant Box and we'll have a technical analysis area and a fundamental analysis area, right, Kyle? And you're like, oh, that'd be sweet. Good, I have to double the price. Oh, well, I don't want to double the price. Shouldn't you be able to just select? And then all of a sudden, now we're doing authentication problems and talking to two different servers. And all of a sudden, it just really can't be done. I mean, it could be done. It's not. Technically, it would be the least efficient way of doing it, right? But anyways. So trader.com, huh? It's actually .cm, Trader Capital Management. So anyway, so $50, huh? That's going to be a tough one. And it doesn't look like 100 people want it. That's the other thing. So I don't know. All right. Well, thank you for your feedback. I appreciate it. I will see you later today. Remember, you have to spend a whole bunch of money, $4.44 to contribute to Wayne's Chateauneuf de Pape Fund. I'll give you the link one more time. I'll probably send an email if I have the time. The problem is I don't have any time. But anyways, thank you for everything. I appreciate you.